Lake Success, New York, November 7, 2017. PRNewswire. The Hain Celestial Group Incorporated. Nasdaq. Hain Celestial are the company, a leading organic and natural products company with operations in North America, Europe, Asia and the Middle East, providing consumers with a healthier way of life. Today reported financial results for the first quarter ended September 30, 2017. The Hain Celestial Group Incorporated, PRNewsFoto. The Hain Celestial Group Incorporated. Our first quarter results were solid with improved net sales growth and profitability, meeting our expectations across our business segments, said Irwin D. Founder, President, and Chief Executive Officer of Hain Celestial. Importantly, we are on track to build momentum throughout the year as our execution of Project Terra continues to drive incremental sales growth and margin improvement to deliver long-term sustainable stockholder value. Financial HIGHLIGHTS1. First quarter results summary. Net sales increased 4% to $708.3 million compared to the prior year period, or 3% on a constant currency basis, primarily reflecting double-digit net sales increases from Canada and Europe and low single-digit net sales increases from the United States, United Kingdom and Hain Pure Protein segments. Adjusted for both constant currency and acquisitions and divestitures, net sales increased 4% compared to the prior year period. Gross margin as a percentage of net sales of 18.6%, adjusted gross margin of 19.1%. Operating income of $31.5 million, adjusted operating income of $39.7 million. Net income of $19.8 million, an increase of 131% over the prior year period. Adjusted net income of $23.7 million, an increase of 59% over the prior year period. EBITDA increased 60% to $51.3 million compared to $32.2 million in the prior year period. Adjusted EBITDA increased 30% to $59.5 million compared to $45.6 million in the prior year period. EPS of 19 cents compared to 8 cents in the prior year period. Adjusted EPS per diluted share of 23 cents compared to 14 cents in the prior year period. This press release includes certain non-GAAP financial measures which are intended to supplement, not substitute for, comparable GAAP financial measures. Reconciliations of non-GAAP financial measures to GAAP financial measures are provided herein. First quarter operating segment highlights. Hain Celestial United States. Net sales for Hain Celestial United States increased 4% to $263.7 million over the prior year period, reflecting growth from the Pure Personal Care, Better For You Baby and Better For You Pantry platforms including Alba Botanica, Jason, Avalon Organics, Live Clean, Earth's Best, Spectrum and Imagine brands, partially offset by declines in Fresh Living with the Greek Gods brand, Better For You Snacking with Garden of Eden brand and Tea with Celestial Seasonings brand. The prior year first quarter results were also negatively impacted by inventory realignment at certain customers. Segment operating income was $20.9 million, an increase of 11% over the prior year period. And adjusted operating income was $23.1 million, a decrease of 5% over the prior year period, driven primarily by higher marketing investments. The financial results for the current period as well as the prior year first quarter results excludes the United Kingdom operations of the Ella's Kitchen brand, thereby eliminating net sales of approximately $23.1 million and $21.4 million, respectively, as these net sales are now reported as part of the United Kingdom reportable segment. Hain Celestial United Kingdom. Net sales for Hain Celestial United Kingdom increased 1% to $222.4 million over the prior year period, reflecting 8% growth from Tilda and Ella's Kitchen, partially offset by a 1% decrease from Hain Daniels. Hain Daniels net sales, adjusted for both constant currency and acquisitions and divestitures, increased 2% over the prior year period, with strong brand performance from Hartley's, Linda McCartney's, New Covent Garden Soup Company and Sunpat brands. Hain Celestial United Kingdom, on a consolidated basis, was up 4% over the prior year period in constant currency adjusted for acquisitions and divestitures. Segment operating income of $9.6 million increased 23% over the prior year period, and adjusted operating income of $12.9 million increased 39% over the prior year period, driven by strong contribution from the Hain Daniels brands. As discussed above, the financial results for the current period as well as the prior year first quarter results includes the United Kingdom operations of the Ella's Kitchen brand, which was previously reported as part of the United States reportable segment. Hain Pure Protein. Net sales for Hain Pure Protein increased 2% to $119.1 million over the prior year period, reflecting a 6% increase from the combined Freebird and Plainville Farms businesses, while the Empire Kosher business net sales declined 6% with more sales attributable in the prior year period due to the timing of the Jewish holidays. Segment operating income increased to $2.2 million from the prior year period loss of $1.0 million, and adjusted operating income increased to $3.6 million from the prior year period loss of $1.0 million due to improvements in operating expenses across the business. Rest of World. Net sales for Rest of World increased 14% to $103.1 million over the prior year period, or 9% on a constant currency basis, driven by 13% growth from Hain Celestial Canada from Yves Veggie Cuisine, Sensible Portions, Live Clean and Tilda brands, and 10% growth from Hain Celestial Europe from Danival and Joya brands and own label. Segment operating income increased over 77% to $9.0 million over the prior year period. Fiscal year 2018 guidance. The company reiterated its annual guidance for fiscal year 2018, net sales of $2.967 billion to $3.036 billion, an increase of approximately 4% to 6% as compared to fiscal year 2017. Adjusted EBITDA of $350 million to $375 million, an increase of approximately 27% to 36% as compared to fiscal year 2017. Adjusted earnings per diluted share of $1.63 to $1.80, an increase of approximately 34% to 48% as compared to fiscal year 2017. Guidance, where adjusted, is provided on a non-GAAP basis, which excludes acquisition-related expenses, integration and restructuring charges, startup costs, unrealized net foreign currency gains or losses, accounting review costs and other non-recurring items that have been or may be incurred during the company's fiscal year 2018, which the company will continue to identify as it reports its future financial results. Guidance excludes the impact of any future acquisitions. The company has not reconciled its expected adjusted EBITDA to net income or adjusted earnings per diluted share to earnings per share under fiscal year 2018 guidance because certain items that impact net income and other reconciling metrics are out of the company's control and/or cannot be reasonably predicted at this time. Effective July 1, 2017, due to changes to the company's internal management and reporting structure, the United Kingdom operations of the Ella's Kitchen brand, which was previously included within the United States reportable segment, is included in the United Kingdom reportable segment. The prior period segment information contained below has been adjusted to reflect the company's new operating and reporting structure.